Hello everyone, good Monday morning. I'm Zev Fema, research analyst with Action Alerts Plus, here with Jim Cramer, live at the floor of the New York Stock Exchange. Jim, we had an amazing weekend. We'll definitely talk about the boot camp and stuff in a moment, but let me just get your thoughts on the market. We rallied a little bit on Friday, down a little today.
Well, all we hear now when you're on these conference calls is end of cycle. End of cycle is deeply related to the fact that the Fed's committed to 3 hikes. I spoke about this at our teaching this weekend. What happens is that when you're Bank of America, even though their net interest margin is very good, and they're opening a lot of checking accounts, which is really valuable, people just say loan growth has to slow. Loan growth has to slow. And also we have a lot of non-bank lenders, which is hurting profit. Wells Fargo said that, but Wells Fargo got too cheap. So what happens is that people just say, I don't really care how cheap Bank of America is, 11 times earnings. It is the end of the cycle. And that is coloring a lot of different sectors. I want to counter with, at a certain point, the Fed blinks and they don't do the 3 rate hikes, and you're going to say, wow, I did all this selling. But understand that there's 2 camps right now. There's the camp which just says, you know what, stocks are cheap, and then there's the camp that says stocks are going to get cheaper, witness Goldman Sachs. And this camp that says stocks are going to get cheaper is winning right now, even though the market's most oversold since the February bottom.
Right, and you actually beat me to it, Jim. For us to take another leg higher, is that what we need? We need Jerome Powell to come out, ease back a little bit on the call for the hikes?
Yes, or at least let it be known that, look, this 3 hikes next year, what that's about is we believe that the economy's strengthening, and if the economy's not strengthening, then we're obviously going to have to walk it back.
Data dependent.
Yeah, I mean, I think if he came back and said, you know what, I'm not abandoning data dependence.
Right.
If he literally just said, I'm not abandoning data dependence, 5 words, then you're going to have to come in and buy everything. And so what I'm trying to do is say, listen, the one thing we don't want to do is panic, because he may say, I'm not abandoning data dependence. And you're going to say, why did I sell Bank of America at 27? Right. And that's all what I'm trying to say, and I talked about this in teaching, is I understand the market's coming down because of the late cycle. But the yin to the yang to that yin is that they listen. I just do not believe that he can be as committed as everybody says to a recession, to making a recession.
Right. So there you have it. Have your watch list ready. Keep an eye on Jerome Powell. That's what you're looking for. Jim, let me jump real quick to the stock of the day, which is on Real Money. You can follow Kevin Curran and check that out. It's JC Penney.
Yeah, we have a huge number of stories that we're going to be doing. Now, look, stock of the day is very important because it's forward-looking. We could write about Sears. What does that tell you? We have to worry about the next Sears. JC Penney at $1.50 is the next Sears. Perhaps there is a new CEO. They have a bad balance sheet like Sears. They've been losing share like Sears. There's a lot of malls that actually wish that JC Penney would get out because they can repurpose and sell them for higher, sell that space for a better rent. So stay tuned to stock of the day, because if it's JC Penney, I know it's only $1 stock, but it would be important if you felt that Penny goes under. There would be a lot of people laid off. Look, you see Sears, everybody can always have, Toys R Us is the extreme where they just close. I'm not saying Penny can do that. I am saying that you have to pay close attention to Penny after Sears.
Okay, so
that's what stock of the day's about.
Yep, there you have it. I mean, we absolutely blitzed whatever the stock of the day is, so today you can expect a lot of articles on JC Penney. If you're interested in it, be sure to get over to Real Money. Jim, we just switch sectors real quick? I want to talk about your mad dash, which was Lowe's. First off, why didn't you go with Home Depot? And even though we have seen stress in the housing market, are these hurricanes, the increasing intensities, is this a reason to really be looking at these names long term?
I mean, people say they're one-off. I know Mexico Beach very well, and I know Cape San Blas very well, and that was really hit. Now, the Florida Panhandle was hit very bad, but that's not enough to drive these stocks. The note that I was citing about Lowe's, there has historically been this tremendous rivalry between Lowe's and Home Depot, and Home Depot pulled away. And what the note is saying is that Marvin Ellison, who's a very good, able CEO, who came from Home Depot, forget that he was at JC Penney. JC Penney was a soft goods company that had already been pretty much decimated by a strategy that Bill Ackman had put in. That's gone. But what Ellison's doing is paying attention to detail, trying to get that pro customer that Home Depot's taken. It's just low-hanging fruit. That said, again, late cycle, end of cycle, you don't want to buy either. Home Depot's come all the way back down. It spiked off the hurricane. I would say that, again, you want to keep track of these stocks. They will snap back the moment that the Fed walks back. And that is my big theme, which is that you can sell, sell, sell. And as the stocks go lower, the Fed will realize, the Fed will become more data dependent, and then you'll have to get back in. So be careful selling everything here.
So you're not pulling the trigger on them now, but it's on the watch list for any
I really like Home Depot down here, and I'm getting more and more interested. But we have a housing starts this week, and housing starts will be bad, and they're the pro, and that means that people will cut numbers Home Depot, and that's probably wrong to do.
All right, Jim, we've got a little bit of time left. I want to go 2 quick things. First off, the top 1 or 2 lessons that you pulled away from this weekend's boot camp.
Well, I think the first is Ed Yardini saying this is the most bearish bull market in history, just talking about how everybody's negative, and he was talking about even referencing my view, which is about the 3 hikes, and that's negative. And then the second is Bruce Linton, along with Bill Newlands, that's CEO of Canopy, president of Constellation, saying, look, this is gigantic. The repeal is gigantic, and they are the best because they've got the war chest. It continues to remind me to stay with cannabis. I know there's going to be a peak, and a lot of the not great companies are going to get slaughtered, I think, after the peak, as people realize, wow, ka-ching, ka-ching. Come back to Canopy when they do it, and maybe come back to Constellation.
Right, and if you're interested in the industry, get over to TheStreet.com all week. We're going to be running videos, interviews with Canopy, with other companies that we had the pleasure of meeting the CEO with over on TheStreet.com all week, so check that out.
We'll have the actual interview and then the actual panels and then what you interview, which was really terrific.
So Jim, last thing, I can't let you go without asking, 60 Minutes last night, we heard from President Trump. He says, he's not pulling the spending contract out of Saudi Arabia, but obviously that is still going to be a concern for investors. What are your thoughts?
I mean, I think that there's been a tremendous downturn in Raytheon. The president mentioned point blank that Raytheon, he wanted to protect Raytheon's interests. He's deeply committed to spending, letting other countries spend on our defense contractors. Other people are saying midterm elections are going to go to the Democrats, so therefore you got to sell them. They've already been sold, so I don't know how much lower they go. Obviously, I think they're oversold, but then again, that's a bear market in defense. I mean, you have to understand these are bear markets. We managed to take a break from 60 Minutes because we got a new dog, Marley.
Right.
Marley is was a rescue dog. A lot of picture. Oh, please, if you don't mind, go to Jim Cramer on Twitter and post a picture of your rescue dog. I really want people to understand that rescue dogs, are killed if they're not rescued. They go to kill centers, and I call them kill centers because I want people to understand that these are places. Don't think that they sit there at these shelters, the bad ones, and wait around for buyers. No, they don't. They euthanize them, and that's why when we got Marley from a Tennessee shelter and we posted the name, that we knew that we felt good on 2 things. One is that Everest, also known as NVIDIA, finally had a partner. Everest had been incredibly depressed because Bug was put to sleep after a big tumor and was discovered. And Marley has brightened Everest's day, although Everest is obviously playing the role of top dog, and his life was saved. So go to your shelter and rescue, or go to your Twitter feed and reprint your dog, your rescue dog, because I'm really trying to focus on saving dogs this week.
Yep, we want to see him, Jim. Big fan of going for rescue dogs. I've had 2 cats rescues.
There you go.
Also, so definitely, love to see that.
Yes.
And I should have said at the top of the call, the reason Catherine's not here, she's interviewing Anthony Scaramucci. So check out her Twitter feed.
Scaramucci did an interview. I mean, he did a Skybridge conference, and he had some interesting things that he got out of it that I think would be good to the Catherine's interview.
To check in on. Yes. So check out her Twitter feed. She'll have an article on TheStreet.com later today. I'm Zev Fema, research analyst with Action Alerts Plus, here with Jim Cramer. Thank you for joining us.